give a big shout out to the reason why we're here today, which is WAFED Bank, which is sponsoring and supporting this series of webinars. And with us, we have Michelle Coons, just to say hi very quickly. Michelle, thank you so much.
Thank you, Danielle. Just wanted to tell everyone online that it's an honor and a privilege to sponsor this series. WAFED knows we're 107 years old. We are publicly traded. We are the 8th largest bank in the state. But I think the most important thing that's relevant to today is that we have locations in 16 different New Mexico communities. And we know small business is the heart and soul, not only of New Mexico, but throughout our country. So honored to be here, and thank you very much, Danielle.
Thanks again. All right. So for anyone watching, we always love to make sure that we also throw a high five to all of our contributors. We also have a large number of contributors that support us at the advocate level, and you can find all of those on our website at abq.org. We have a full contributor directory, so if you're ever looking to connect with someone that also supports area and kind of keep it in the family and in the community, feel free to do that. But none of the work we do would be possible without all of these many supporters, so we're grateful throughout the year to them. Just a little bit of a refresher for anybody who might be new to us or hasn't engaged with us in a while. Area, formerly known as Albuquerque Economic Development Incorporated, has a long history in this community. We were actually originally formed in 1960. So in about a month, we're going to start celebrating our 65th anniversary year, which is just kind of mind-blowing to think about. But we have undergone some significant changes in the last few years, which was converting ourselves formally from a 501c6 business association to a full-blown public charity, allowing groups like WAFED to support programming like this. So we love that. But we also have modified and updated our bylaws and our board of directors components so that we now have a true public-private partnership, also with local government serving on our board and engaging with us. And we have always, as far as I can tell, back in our bylaws since inception, seen ourselves as serving the 4-county region. And also part of our purpose for existing is to relieve the burdens of government through economic development support with an ultimate goal of reducing poverty, which you also see reflected in our mission statement. We are working to elevate the standard of living for everyone through the work that we do. So a little bit about that structure. Anybody that's curious about how we engage, especially on the economic development deal side, we work hand in glove with the Economic Development Department, as well as the New Mexico Partnership, which is the business attraction and marketing arm of the state of New Mexico. I'd say we talk to them daily or even more frequently on average. And then we serve as the regional responder, collaborator, connector, and marketing arm for economic development on behalf of these are many of the communities that we serve within the 4-county region, and we actually expect to have at least one, maybe two more very, very soon. And when we think about how we serve clients, and when I say a client to area is a company. It's any business that is, and we do focus on companies and businesses that we consider to be base industries. And what a base industry means is they are exporting more outside of the state than they are selling inside the state. And the reason we focus on that is it is our niche to work on companies that are bringing net new wealth into the community. But do know that that makes a significant impact. Of course, if we are bringing in companies that are either manufacturing things or creating technologies or IP that is being sold out of state and bringing dollars in, that means net new payroll for residents. It means dollars into homes and families that they then are going to circulate within the economy and spend at local home-based and small businesses across Greater Albuquerque and New Mexico. And when we work with these companies, we do all the things you see here. We provide them very in-depth market analysis. We provide them assistance in site selection within our community, and this also goes for existing companies. So Array Technologies is a really great example of one that could have easily left our market, but we worked very hard to serve them in this way to help be one of the many partners keeping them in the community. We can also act as a single point of contact outside of government, which can help maintain confidentiality, and we connect them to many, many key resources and of course, incentives and tools. As well as all kinds of things like higher education partners and other stuff. So that's just a very quick primer. There's a lot more to it, as I'm sure so many of you know that work in this space alongside of us every day. But with that, that's my portion, and I'm so excited to hand it to Anita, who is going to introduce our speakers so that they can give you a really just huge wealth of information and content today. So Anita, take it away, and thank you again.
Thank you, Danielle. So hi, everyone. I'm Anita Campbell. I serve area each day by carrying out our business retention expansion program that you heard Danielle mention. And this is really done by meeting with companies to ensure they are taking full advantage of all the state and local services and incentives. Also, during our discussions, we learn about their business climate, talk openly about pain points, and figure out how to respond. My other area of focus, as Danielle mentioned, was workforce and talent engagement, which just goes completely hand in hand with the BRE program. And today, it's truly my distinct honor and pleasure to introduce three guests, three speakers who are complete adjacent partners to everything we do here at Area. Each represents state-driven business support programs and organizations that we work alongside and connect with business leaders to drive those solutions. So just a little bit about the rest of the program today. Since we have three speakers, they've all prepared great information to share with you, but we're gonna hold live questions until towards the end. So all the speakers are gonna stay till the end. So note the Q&A function. Please submit any questions as you think of them, and then I'll be reviewing those throughout, and then we'll pull those up towards the end. So I'll keep track. Our first speaker, I'm really pleased to introduce Victoria Perez. She is the business consultant for the Central Region Workforce Innovation Opportunity Act, which is also known as WIOA. Victoria is heavily engaged with our employers and our workforce candidates seeking their next opportunity. So Victoria, please take it away and tell us all about WIOA.
Good morning, everyone.
Oops, I'm sorry, I went backwards.
Okay.
There's your lovely face.
So WIOA is a federal funded program. It's known as the Workforce Innovation Opportunity Act. We support local businesses. Next screen. So we have 5 services that our program provides to employers. It's on-the-job training for new hires, OJT skill upgrade for individuals who are employed 6 months or longer and getting promoted. We have customized training contracts that we write up. These are contracts for individuals or work employers who are sending individuals to a training, and there's a cost of the training for the employer. We can reimburse 50% of that cost. We offer internships and transitional jobs for all our participants. On the job training, it's the 50% reimbursement of the employee's hourly wage to the employer. These are positions that the employer is willing to hire somebody who may not have all the skills for the job and willing to train them. The participants must all be enrolled in our program. OJT contracts that are written within 5 business days. WIOA's reimbursement checks are issued monthly to the employer. So there's a timesheet every month, and the employer will get the reimbursement check mailed to them every month as well. A company may qualify up to 10 OJTs. Okay, some of the on-the-job training programs we have, again, is to help individuals fill skill gaps for positions. Some of the conditions for funding is they have to be within our what we call our top tier businesses, which is healthcare, commercial, construction, professional, scientific, technical services. Employers have to be up to date on all their tax obligations, federal, state, and unemployment insurance. And we have to have that 1-to-1 ratio of training. Employers are also required to have workman's comp and general liability insurance in order to participate. Next screen. OJT skill upgrades. They're for individuals who an employer identifies within their work that has been there 6 months or longer for a higher position. We can reimburse 50% of their hourly wage back to the employers. An employer can do up to 5 OJT skill upgrades, the total max of 10 OJTs per program year. And employers receive that, the clients have to receive at least a 10% increase in pay, not to exceed the 56.51 per hour. Next screen. The Employed Worker Training Program is customized trainings. Again, if an employer has a specific training they like to send an employee or a group of employees, and there's a cost to employers, we can reimburse 50% of that cost back to the employer. 50% of that cost will be refunded back to the employer when the individual completes the training, gets a certification or a certificate out of it. Next screen, please. Again, these are the things that we can reimburse for, and the non-reimbursable ones are travel expenses, or we do include the employee's wages as an in-kind contribution towards the training. And you can see it's materials, books, tuition fees, and costs that we can reimburse. Next screen, please. Required documents for all participants. The participants must be all what we call have right to work documents. They must be registered in our system. They must have driver's license or state ID, social security card. Males must be registered with selective service. If they're participating in an internship, they must have their transcripts. Veterans are priority, so we look at DD 214s, and they will be required to do some assessments, reading and math. Next screen, please. I think we had taken this one out. I had changed some of the screens, so this one we can just skip.
Okay.
And we can skip that one too. I think I had sent a revised one. This is the internships. Okay, individuals who qualify for an internship through our program, these are paid internships for employers. So the employer will host the individual for 4 months. The individual is paid through our program, up to 29 hours a week, up to 4 months. This training is individuals who are in college and about to get their degree and no more than 1 year post-secondary to qualify for an internship through our program for employers. Next screen, please. Transitional jobs. These are jobs for individuals who may not have a lot of work history, and what we do is try to place these individuals with employers who will host them for 4 months, give them an opportunity to fill skill gaps, learn new skills at our expense at 29 hours a week, with the ability that if they do really well, they can get their foot in the door to a permanent job, which we can convert again to an OJT for an additional 3 months. Next. This is my information. If you need to contact me about WIOA and find out some of our services, how they would benefit your program or your business, this is my contact information. Thank you.
Thank you so much, Victoria. Our next speaker is Patrick Gannon, JTIP Program Manager. Patrick is a graduate of UNM's Anderson School of Management. He's been with the Economic Development Department representing Job Training Incentive Program known as JTIP for 10 plus years. Patrick has served as program manager for the last 5 years, and Patrick has extensive experience, has been working with the industry for over 20 years in both economic development and workforce development. Patrick, please tell us all about JTIP.
Well, thank you, Anita, and thank you to Area and the team. It's my pleasure to obviously present JTIP today. I had to really condense this information down to 10 minutes. It's usually a little more comprehensive. So if a company would like to visit with myself and Avelina Borrego, the JTIP marketing coordinator, we'd be more than happy to visit with you to kind of go into a more comprehensive approach. But with JTIP, Job Training Incentive Program, we've been around since 1972, not as long as area. We're in our 53rd program year. Every year we get legislative appropriations. Part of it is our base budget, and then usually we wind up with special appropriations if we have large economic development projects that are going to put a demand on the program. So, for example, in years past, last year we didn't get a special appropriation, but the year prior we received $3 million additional dollars. This year with the legislative session, we are looking at requesting about $10 million in special appropriations because of a fair number of new projects that are coming online that have been announced through the governor's office, specifically in the alternative energy or renewable energy sector, Maxion Solar and Ebon Solar, which are going to be breaking ground and opening up operations probably in 2026. But Anita, next slide, please. So what JTIP does is obviously, as Danielle mentioned, the program is really designed to work with companies that are economic base, which are those companies that produce a product or have a service, and they're exporting that and bringing new dollars into the state's economy. What we're able to do through the program is work with companies who have acknowledged that they are expanding their workforce, and the program allows us to cover a portion of the wages while they are learning the disciplines or the competencies and the new roles that they're going to be taking on. So we provide employment and skill development opportunities for New Mexico residents. Next slide, please. So how does JTIP benefit companies? Well, again, we reimburse qualified companies for a portion of expenses associated with training new employees. Training typically is on-the-job training from the moment they touch the company payroll to the time that they complete their training hours. And I'll go into a little more detail on that one. Companies who are creating high-wage jobs, which in Albuquerque are jobs that are over $60,000 or the equivalency of $28.85, they qualify for an additional 5% reimbursement, but they also qualify for the high-wage jobs tax credit. And for companies that are located outside of the Albuquerque metro, like in areas, service area like Belen, Los Lunas, Corrales, these operations are considered rural, and they would be eligible for the rural jobs tax credit as well. And I'm not going to go into the details of that, but we'd be more than happy to visit with you if you'd like to have some more information on those tax credits. Next slide, please. So again, what JTIP does is it reimburses a portion of wages anywhere between 50 to 75%, depending on where the company is located. In Albuquerque, in urban areas, which is a population of over 60,000, we're able to cover 50% of the wages up to 6 months. In rural communities with a population of less than 60,000, it goes to 65%. And in communities, again, in the surrounding areas of Albuquerque Metro, like our Native American communities, they would qualify under the frontier status as a 75% reimbursement. Training hours will vary from position to position, depending on how those jobs are classified in the ONET system. And there's another slide that'll showcase that. But we can basically fund a portion of the wages anywhere between 2 to 6 months. Next slide, please. So on top of the base reimbursement, companies are eligible for an additional 5%. Again, if they're creating a high wage job, as it indicates there, $28.85 in Albuquerque, in the rural areas, $19.23. But there is an additional 5% opportunity that could be bundled with the high wage if companies are hiring individuals who are recent graduates from one of New Mexico's institutions of higher learning. They hire an honorably discharged veteran, or they hire an individual who's aged out of the foster care system in New Mexico. Any one of those would get an additional 5%. Those aren't stackable. So if you have one person that meets all three criteria, only one of those additional 5% would be applicable. But again, that would be, it could be bundled with the high wage jobs if it is a high wage job. Thank you. Next slide, please. So this is the ONET system. This is what we use to determine how many hours and how much we can appropriate to any given position. The ONET system is affiliated with the U.S. Department of Labor. It's basically a database of occupations, thousands of occupations. That database qualifies positions by their level of complexity. They define those by job zones 1 through 4, 1 being a lightly skilled entry-level occupation and 4 being the opposite. So as you can see by this metrics, if we look at the job zone 3 occupation, for example, it would be eligible for 960 hours of support if the position has a starting wage of at least $21.50. In a rural area, that drops down to $16.68. Let's say a company doesn't offer the $21.50 to qualify for the full $960. We look at the wages, what they're going to be paying, and drop down the number of qualifying hours accordingly. So we don't rule it out completely. We just align it to where it fits into our scale. Next slide, please. So the types of business we work with are primarily manufacturers. I'd say about 95% of the companies we work with are in manufacturing, and those are statewide. This is a statewide program. We do work with non-retail service companies. Those are basically companies like engineering firms, software development companies, and they have to demonstrate that at least 50% of their revenue is coming from out of state. And we have metrics that we follow to determine that component of eligibility. I'm not really going to go into the detail of what we do on how we do that, but we have metrics that we have to follow on that. And we also work with companies that are not in manufacturing and also are not exporting their service, which would include, for example, companies in the green economy, which would be primarily like solar installation companies, as an example. Next slide, please. So qualified companies must be expanding, creating net new jobs. We work with companies that are relocating to the state of New Mexico, obviously opening up new operations. Like I mentioned earlier, with a couple of solar companies that are coming online here in the next 18 months or so. We work with existing companies who are expanding and growing their workforce here in the state. And then we also work with startup companies. Those are companies that are transitioning out of R&D into commercialization. When we look at those type of companies, we obviously have very specific requirements. It's a little more rigorous for those early stage companies to demonstrate that they have sufficient operating capital to cover their expenses for up to 2 years. If they're pre-revenue, if they're early stage, in their early stage revenue generation, we look at other numbers. But next slide, please. Part of our requirements is because JTIP is funded with legislative appropriations, we do have a fiduciary responsibility to financially vet every company that comes to us. So typically we do require companies to provide 3 years of financial statements, which is their balance sheets, profit and loss statements, and statements of cash flow. And so if a company has less than a 3-year history, we'd like to see financial statements for the periods that are available. And these are for companies that are obviously in more of a mature space. But for those early stage startup companies, again, we have to dig a little deeper to demonstrate that they have the sufficient means to cover their expenses. So some of those things would be, as indicated there, a business plan, the pro forma, which is basically revenue projections. We'd like to see 2 or 3 years. Sales projections, evidence of signed contracts or purchase orders if they have them, evidence of access to capital. Do they have investor capital? Do they have a line of credit? Do they have SBIR phase 1, phase 2 from federal agencies to support their research that helps them transition into commercialization? So we have to look at a lot of different things when we work with companies to determine that they are financially viable for the program. Next slide, please. So the types of jobs that we work with are basically have to be full-time, at least 32 hours a week. primarily in manufacturing. Obviously we work with companies that are in manufacturing mostly. We do have a 4-to-1 ratio. So if a company comes to us with an application and they are looking to hire some, let's say, manufacturing technicians, we would look at that at a 4-to-1 ratio, meaning for every 4 positions that the company is requesting funds for production, we would be able to fund a non-production position, which could include customer service, a sales representative, a software engineer, bookkeeper, an office manager, and so on and so on. We also do have an internship program. I'm not really going to go into a whole lot of detail, but we've made a change to that program over the last year, which allows us to cover up to 1,400 hours of training for an intern, to encourage our employers to work directly with our universities to bring in talent. Obviously, it's a great pathway for employers to find and hopefully hire on individuals who are transitioning out of our universities into our workforce. Next slide, please. The positions must be new to the company, although we have made exceptions to this rule. We do look at internal promotions on a case-by-case basis. So if, let's say, you have a manufacturing production technician who's been with the company for a while, and now the company sees that this individual maybe has leadership skills and can step into a production manager position, we definitely take that into consideration and will likely award the company funding for that promotion. Individuals must reside in New Mexico during their training, of course. Individuals can work remotely or obviously on site with the employer or a hybrid. Individuals also must have lived in New Mexico for at least 1 continuous year at any point in time in their life. What that means is, let's say you have somebody who was born and raised in Albuquerque and maybe moved away, took a job up in Denver, and now wants to come home for employment opportunities or to be with family. They would qualify under the program because they had that historical residency requirement. They met that historical requirement. Next slide, please. The program implementation, we're a small team. There's basically 3 of us and a compliance officer. Myself being the program manager, Avelina Borrego, the marketing coordinator, who is the primary point of contact for industry, who qualifies companies for eligibility. What we do is we work with companies and guide them through the application process and basically prepare them for one of our upcoming board meetings. We have a JTIP board meeting that is typically the second Friday of every month. And every month we have anywhere between 9 to 15 companies that are coming to us with requests for funding. Those requests can, once they have an application in the pipeline, the company is identifying their hiring needs over the next 6 months. That can be 1 job or that can be 500 jobs. It's like, what is the realistic target that the company can realistically fill within that hiring period? Companies get, if they come in for, like, let's say 50 jobs, they're going to get awarded money for all 50 jobs, and they pretty much have the blessing of the board to hopefully find and fill those jobs within the time period that's been appropriated to them. We have myself, as I mentioned, Avelina, and then we have a fiscal administrator who's everything post-approval. She generates what we call contract agreements, or otherwise known as grant agreements. Those are good for 1 year. So basically we are all hands-on working with the companies to ensure that they have a successful outcome with our program. Our JTIP board is comprised of representatives of both the public and the private sector. Economic Development, Department of Workforce Solutions, Department of Higher Education, Department of Public Education, Organized Labor, and then a representative from the private sector. That body of individuals meets again the second Friday of every month. They basically hear requests for funding. We go through an annual or basically a proposal introduction to the board members. And then there's the official ruling by the board if they so desire to approve the request. After that, the company has the 1 year and the first 6 months to hopefully fill those positions that were just awarded. Next slide, please. So what happens after the board? I think I already touched on this. You have 6 months to fill the jobs. The training must be completed within the 1 year contract period, which is why we cut the hiring period off at the midpoint of the contract. Companies are required to submit a hiring report at the midpoint of the contract, basically acknowledging the positions that have been filled. And as they have individuals who have completed their training, we do encourage the companies to submit claims for reimbursement as they have trainees completing their training. Our program comes back as a cash reimbursement. This is not taxable. It's not considered revenue to the company. Companies can receive the money through direct deposit or directly through a cash or through a check. There is no caps, meaning we don't have a wage cap. So the higher the wage, the more we are appreciative of that, because we always encourage companies to pay the best they can to bring the most qualified talent that they can. The only types of positions that we don't fund are executive level, which would be like CEOs, CFOs, CTOs, but everything under that is fair game. We don't do any skill gap analysis. We don't review resumes. We don't review the qualifications of an individual. We basically defer that all to the employer, who obviously is interviewing and qualifying candidates for the various positions. So that's something that we don't do like the WIOA program. We don't get involved with the assessment of individuals. There's no limitations to how many times a company can apply. They can come back as often and as frequently as needed, as long as the company is continually expanding, creating net new jobs. We don't fund attrition. We don't fund backfills. They have to demonstrate that they are creating net new jobs. And again, we have metrics that we follow to ensure that requirement is being met. The JTIP staff works with the companies throughout the project period. Both myself, Avelina, and Lynette King, our fiscal administrator, again, to basically determine a successful outcome of the company. We have of the project. I mean, we have numerous companies that we see every 6 months. I know that there's several companies here on the call today that have been frequent flyers under the JTIP program. I won't mention them right now, but I'm glad you're here today. Thank you so much for being supportive of our program. And we, again, as long as these companies can demonstrate that they're continuing growing, we're going to be there to support them. Next slide, please. And here's our contact information. Again, I'm the program manager, Avelina Borrego, the primary point of contact. And Lynette King, typically you won't really be working with Lynette unless, of course, you have an active JTIP contract with us. But thank you very much for the opportunity to present. Like I said earlier in the beginning of this slide, normally there's about 35 to 40 slides in the JTIP presentation, which usually takes anywhere between 30 to 45 minutes to present. So this is a quick down and dirty approach to it. So again, if you want to learn more about the program, we'd be more than happy to visit with you to discuss this in a more comprehensive fashion. And Anita, back to you. Thank you very much.
Thank you, Patrick. Great job. I know between our first two speakers, there is a ton of content and additional opportunity to learn more from each of you. And so thank you so much for sharing that. Like to remind everyone that's a participant that the Q&A is the place to enter any questions for our speakers. We have, we would love to engage in that question opportunity. But our next speaker is Sandro Tonini. He graduated with honors from UNM, where he studied operations and marketing. Currently is pursuing a master's degree in finance. In addition to overseeing West's statewide microloan program, Sandro also directs a statewide money learning lab through West. Sandro, please share with the group the opportunities that West has to support small business and lending.
Good morning, everybody. Thank you so much, Anita. It's a pleasure to be with you all today. We're going to talk about West in general, and then we'll get more specific into the loan program. And so we've got a couple of pictures up on that slide of clients that we've been working with throughout the state. And I'll go through them very, very quickly. On the left, we've got Sarah Roman, who started Tombstone Betty's, a jewelry company here, alternative culture brand in Albuquerque. Next to her, we have Tessa, who started a barbershop. She's a third-generation barber and started her own barbershop. Next to her, we have Alicia, who has a jewelry company down south in New Mexico. And then we have Jordan Tate, who is currently an incubator client for West. We helped him get, from the very beginning, get started on his business, from formulating what the business idea was to now the great success that he's having. Next to him is Francisco Orduño, a client we have out in Roswell that runs a hotshot company. Next to him with the ponytails, we have Sean Medlock, the owner of Rumor Pizza, which I would argue is the best pizza in the entire state of New Mexico. Next to that, part of our team down in Hobbs with Susana Arvizu. We helped her start a State Farm insurance agency down in Hobbs. Next to that is our intern, Rafael, and a client that started a data company that's now working several federal contracts. Move to the next slide. So West is home for entrepreneurs. We were founded in 1989 by women for women. And as a nonprofit, we offer training, consulting, and lending to anyone in New Mexico who wants to start, stabilize, or grow their business. 90% of what we do is education and training. We'll talk more about those programs specifically, but we are an education organization that happens to have its own loan program, and we'll jump into each of those pieces here shortly. We have 7 offices across the state. These are a network of women's business centers. And so in the late 80s, it was still common practice and completely legal for banks to discriminate against women to the extent that it was common practice for them to require a male signature for a woman to get a business loan. This started conversation in Congress. They did research study, and these geniuses published a report that said that they had determined that women were significant contributors to the American economy, but discrimination was rampant, resources were sparse, and so they created the Office of Women's Business Ownership, which created the Women's Business Center program. And so West operates 6 women's business centers across the state. We have 7 offices going from Albuquerque, Farmington. Hobbs is our newest office, Las Cruces. And then we have Santa Fe, Rio Rancho, and Roswell as well. These offices offer all of the services that we have. We are centrally based in Albuquerque, but we've got staff all over the state supporting the work that we do. In Albuquerque, we're headquartered out of the West Enterprise Center, which is a 37,000 square foot facility where we live with our clients. West occupies a small space of this building. The rest of it is a mixed-use business incubator. And so just thinking about the word incubator, just like an egg incubator, we create a very safe space for our small businesses who are growth-oriented to complete that growth and ultimately graduate from the incubator program, buy or build their own building. It's mixed use. We've got biopharmaceutical companies. We've got a staffing company. We've got wet labs, office space, warehousing, and light manufacturing space in this building. It's a silver LEED certified building. And this is where a lot of the training and consulting for Albuquerque takes place alongside a lot of our business clients. Within the incubator here at the West, we have the studio at West, which has a 180-degree cycloramic green screen and does end-to-end digital media production. So we're able to do photo, video, and audio work, both on-site using the green screen and as well as off-site to a client where we can produce videos, commercials, documentaries. We've done stream training through to the Bahamas and countries overseas in the Middle East. And so end-to-end digital media production. This is our for-profit arm for the organization. We also leverage this to make it more accessible for our small business clients to produce videos and commercials at a much more affordable rate. So we talked about being an education organization. 90% of what we do is training and consulting. So we have training classes on a variety of topics from marketing, HR, financing, operations, how to build a website. These are offered throughout our women's business centers. And so there are 7 offices that are offering training hybrid format. So someone in Rio Rancho could take a training from Hobbs that's being offered out of our Hobbs office by joining on Zoom. But much more of our classes are starting to come back in person. And so we offer very general topics. Sometimes they're very industry specific, but we do our best to keep them general. And then we follow up those trainings with one-on-one consultations. And so our clients can schedule consultations from 30 minutes to 2 hours. And it's not like the consultations you hear about from those 1-800-lawyers on TV commercials. These are ongoing consultations. You will have pretty in-depth coaching sessions with a consultant of your choosing, in person or online or both, to tackle specific problems answer specific questions, or walk you through different procedures or processes, as paperwork can get confusing. And all of this is to start, stabilize, or grow a business. I failed to mention our training classes range from $10 a class up to $300 a class, depending on the content and any certification that comes along with it. Our consulting is offered at no cost. And so we typically invite people to sign up for training, get an idea of what kind of questions you want to ask, and then follow up with a consultation or a series of consultations to get to that next level. And that will bring us to the loan program. So the other portion of what West does is our loan program, and this is your loan production team. We've got Angelica Ortiz, who joins us after a career in banking and HR, is functioning as our loan analyst. Teresa Rodriguez, we got fresh out of college, but has been an integral part of our team, as our loan program coordinator. Humberto Ijar is a PhD candidate down in Las Cruces. He is the only person that's not based in Albuquerque. He's in our Las Cruces office. He was formerly the regional manager of our Las Cruces Women's Business Center. He is now our financial capability coach statewide. And then Melissa Toland Williams, who's been with West for over 10 years, is our loan operations officer. So being that the conversation is around alternative financing, West is often the lender of last resort. We know that the commercial lending landscape is changing, and access continues to be limited. The fluctuations that we saw with the Federal Reserve caused interest rates to kind of jump around, and they're still on the higher end. And we live in one of the most impoverished states in the country. And so a lot of people are not sitting on $50,000 or $150,000 of collateral that they can pledge for a commercial loan. And this causes a ripple effect in economic development, where the small businesses that have the most potential for impact and creating new jobs and having economic impact are facing these barriers to get access to that capital they need to get to that next level to grow or stabilize. And so recognizing all those pieces, we'll very, very briefly talk through many of the traditional financing opportunities that exist. So there are traditional bank and credit union loans. I had the opportunity to be in Santa Fe yesterday for the finance fair, and it was all the usual suspects. Lots of bank partners, lots of credit union partners, lots of nonprofit lenders, and kind of everybody in between. Traditional bank loans are very regimented processes, but they also have very specific guidelines that banks and credit unions are going to have in place to reduce risk and maximize profitability for their organizations. This leaves a lot of New Mexico out. There are microfinancers, especially online. Convenience comes at a cost. We're finding that our online lenders are very fast at processing and producing loans, but they come at incredibly high interest rates with incredibly high loan fees. There are government grants, which were very popular during the pandemic. The grant landscape has shrunk tremendously. At the federal, state, and local level, we're seeing very specific, industry-specific grants that are still offered, but there are much less grants available than there were during the pandemic. Angel investing is often a hot topic. We have an association of angel investors in New Mexico, but again, these angel investors have a very specific audience that they're trying to reach with those investments. And so it's not common that they're going to be interested in looking at a food truck or a barbershop or anything like that. They have a very specific market they're going after. And then there's crowdfunding, which again was it caught a lot of buzz and attention for a while on Kickstarter and programs like that. Still very, very useful. But for a majority of New Mexicans that are starting, stabilizing, or growing a small business, a lot of these options aren't realistic. Which brings us to an incredible program started by the Department of Treasury called the Community Development Financial Institution. New Mexico has 12 CDFIs, and their purpose are to help the populations of people through financing that may not be able to access, for a variety of reasons, the traditional financing options. And so again, there are 12 of them. West happens to be one of them. And so anytime you're getting prepared for financing, whether that's a grant, a loan, a bank loan, a credit union loan, a West loan, you're pitching to an angel investor, one of the most key components is going to be having a solid business plan. This isn't a business plan that you have in your head or that you can write down on a napkin. but something really tangible that you can use to do strategic planning and thinking and make decisions, timely decisions based on those strategies that you've developed. Having clear financial records. During the pandemic, we saw several programs at the federal, state, and local level that were available for small businesses, but many of those small businesses could not access that grant money or those subsidized loan programs because they had not filed taxes, because they could not produce a profit and loss statement. And so having those fundamentals in place is going to be key for whatever type of financing you're going to be looking for. Having clear financial records and being able to produce financial statements is key. Creditworthiness. The credit system in the United States is very, very complicated on the personal side, and on the business side, it can get even more complicated. And so creditworthiness is also going to take a look at your ability to manage bills and a risk analysis performed by the financier on your ability to repay. Legal and regulatory requirements. Cannabis has caught a lot of attention here in New Mexico, but it's one of the most heavily regulated industries that we have. And so being able to comply with those pieces will be important for that. Having contingency planning. I doubt that there was any single business plan in the world that was ready for a global pandemic that caused a shutdown. We're not saying that you need to plan for those level of events, but contingency planning on if there's an illness or if this product doesn't take off or if this revenue stream doesn't work out, what are the different pieces that the business can pivot on to continue to be sustainable? And then every lender wants to talk about having a holistic approach to how they review a business that they're considering, to the extent of looking at the kind of deposits that you have with the bank, the benefit to the community, the potential for exposure by the bank, and taking a look at all of those pieces to make a decision on them. And so West is a CDFI. We are a micro lender. We are an SBA intermediary. Most importantly, we're a nonprofit that provides technical assistance. We provide the classes, the coaching, the consulting that small businesses need to access that capital. We are a non-competitive lender. We are not here to compete with the banks. We're not here to compete with the credit unions or our other nonprofit lending partners. We will offer loan packaging at no cost to a client that's getting a loan from a bank. And so a lot of financiers don't have the capacity or the ability to coach clients through the loan packaging process on how to repair their financial statements, how to gather this document or that document from the state or the federal level. This is where West fits in. We will help you attain capital regardless of where it's from. We have no preference on you using our loan or another loan. As consultants, we're always going to present to you all of your options and help you weigh those. Ultimately, you'll make the decision. But the technical assistance piece is the biggest difference that West offers. We'll very briefly talk about the 5 C's of capital, the way that traditional financing takes a look at them versus how West takes a look at them. If you're not familiar with the 5 C's of credit, they're the 5 different aspects that lenders often take a look at when considering a loan. And they are capital, capacity, character, conditions, and collateral. We'll spend some brief time talking about each of those. So the capital C is your personal investment. How much of a down payment do you have? How much money do you bring? It's a measure of your skin in the game. It will also take a look at your personal finances or the business finances and things like your net worth. And the financer ultimately wants to know that you stand to lose something as well, and that you're not just asking the lender to take on 100% of the risk, that you come at this with some form of investment. What that looks like at each bank is different. For West, we will also take sweat equity. If you're attending our classes, if you're attending our consultations, if you've spent significant amount of time putting together a business plan, we'll take that as part of your skin in the game. Capacity. This ultimately boils down to your ability to repay the loan or the business's ability to repay the loan or the combination of the two. So there'll be tons of financial ratios that are run by the credit analysts at the bank. And they want to show that the business has the ability to repay the loan. In many instances, it's almost like you have to prove that you don't need the loan to be able to get the loan. And so there's tons of often complicated financial ratios that are run, especially within the cash flow or your business's ability to generate enough funds to pay its own bills, to pay the loan, and to grow on pace with what you're proposing with the loan. The lenders are looking for financial stability. They want to know that they're making a good loan and that it's going to pay back as a standard business practice, but also they have a legal liability to do due diligence and make sure that they're making responsible loans. West has done negative cash flow loans. We have lent to people that weren't in a position in that moment to pay back, but because of the consulting and training we've gone through, the projections we've helped build, and the business planning that we've done, we can reasonably estimate that we can help them get into a position to have positive cash flow to be able to pay back. Character. Character lending became a buzzword a couple of years ago among credit unions and banks, and ultimately it boils down to your credit history and your credit score. Many lenders have a minimum credit score. That minimum credit score is usually right around 670. New Mexico does not have, it does not rank very high on credit capacity and credit scores in the country. And so this often becomes one of the first barriers that's put in place for borrowers in New Mexico, is not being able to meet that minimum credit score requirement. At West, we don't have a minimum credit score requirement. We have never approved a good loan because of a good credit score, and we have never declined a loan because of bad credit score, low credit score. Credit is a factor, but it is never a determining factor for West. We have nationally certified master credit coaches on staff, and we offer credit coaching at no cost. And so this will not be a determining factor for loans at West. Conditions, this can mean a couple of different things. This can mean market conditions, or this can mean the conditions of the loan. Are you setting up a coffee shop to compete across the street from Starbucks, and are you ready to do that as far as market conditions? This can also take a look at the terms and conditions of the loan. How long the repayment period is, what does your payment look like, how is it amortized between principal payments, interest rates, loan fees, any loan covenants you may have to comply with. We'll talk about West's conditions here a little later in the slides, but we've really focused on making them more favorable to the borrower. Collateral. So typically your collateral has to match the kind of loan you're getting. When you buy a house, the banker uses the mortgage on the house as collateral. So if you fail to pay your mortgage, they will take the house, sell it, and recoup their money. When you get a car loan, they retain the title. If you fail to pay that, they can repossess the car and sell it. Commercial loans work very similar. Commercial lenders want to know that their investment, that their loan is safe, and that if the cash flow falls through and you're not able to monetarily pay it back, they have something that they can recoup and sell to recover their funds. Typically, this has to be in excess of the value of the loan. And again, another barrier for New Mexicans who aren't sitting on $50,000 to $150,000 of collateral. The state has come out with some incredible programs for collateral assistance. West takes it a step further. Collateral for us has meant a number of different things. As an example, we have taken alpacas on collateral. We have had a flock of emus on collateral. We've had old, rusty, broken down cars that barely had a title as collateral. And my favorite, and possibly the ones that keeps the president of the organization up at night, we've taken personal properties collateral. We've taken LG mini splits, stained glass windows, MacBooks, jewelry. If it has value to our borrower, it has value to us. We know that an engaged borrower that's consistently working with our consultants will pay back. We take incredibly risky loans at West. I like to joke that we take loans that would give bankers nightmares and diarrhea. And we have an incredible repayment rate because of the relationships that we're building with our borrowers. Our loan program started in 1991. To date, we've lent $11 million, in excess of $11 million. And we currently have several $million available to lend within the state of New Mexico. Our loan program exists to support the training and consulting arms of West.
Oops. Stanjo, for the sake of time, let me take a pause. We have a couple of questions. Want to make sure we get to those before the end of the hour, and then we can circle back. So one is, are there classes available or night classes in Roswell? And I believe that's specifically to you.
There are, yes, there are day classes, evening classes, and weekend classes available. And the consultation is also available around your availability.
Great. I'd like to take an opportunity to invite anyone to present any other questions for our speakers.
Elizabeth had her hand raised. Let's see if we can allow her to talk really quickly if she's still there. Elizabeth, are you still there and do you still have a question?
Yeah, I just have a quick question. I know you were talking about the finance piece of it, and I know it's kind of a challenge, right, with being such a poor state. So when they're looking into financing for a business, are there other parameters, or have you seen somebody denied ever?
Could you elaborate a little bit on the question? I'm not really sure what you're asking.
It went back to the subject before this one, where you're able to lend funding for somebody that's starting off a small business. And then with that being said, that there's a lot of factors that play around that, like number 8, your credit score, or your FICO score, job, everything that's required to make that a solid loan. Do you find that to be very successful when people are out building their business?
So yes, tremendously successful. Those that have engaged in training consulting to put together their business plan, financial projections, or working closely with a credit coach, we have seen tremendous success. So we've gotten $11 million out on the street. We have a repayment, an incredible repayment rate where we have default rate of less than 0.5%. And it's because of the relationships that we're building. These are people, again, as being lenders of last resort, many of our borrowers come to us already having been declined by banks, already having been declined by credit unions, and even having been declined by other nonprofit lenders. And the edge being that technical assistance program that we offer. We don't decline loans. We say not right now. We say not right now and not until you do these XYZ things. Here's a coach, here's a consultant, and here's some classes that we want you to take. Let's take a look at this in 3 to 6 months and see where we're at.
That's amazing. Thank you so much. That answered my question. Thank you.
My pleasure.
I see an additional question. Do you assist with starting home-based businesses?
Absolutely. The cottage laws that went into effect recently definitely changed that landscape, as well as home-based childcare businesses being a special interest that we're taking in now. Home-based businesses have their own intricacies, and we absolutely have specialists that can help with that.
I am going to advance to the last slide, Sandro, where we have your contact information. And for the sake of time, any final questions?
No, it's been very helpful.
I'll slip in our terms while she's pulling that up. We offer interest rates from 0% to 9%, loans from $500 up to $50,000. Again, that's our loan program. If you're interested in another loan program, we can also help you loan package for that loan. If you're interested, you can go to our website and sign up for training, consulting, or directly with my team on the loans page and set up a no-cost consultation for us to get the process started.
Well, thank you, Sandro, and thank you, everyone. Thank you, attendees. Thank you to our speakers. This was a very informative session, and we will be posting this on our website for your review, and all contact information is available. I hope it will spur some of you on to take advantage of some of these wonderful programs for funding for your organizations.
Absolutely. And I'll add one plug. Anybody that was watching today, if you have ideas or special requests on content that you'd like to see us put in a webinar series in the future, please let us know. But yes, thank you so much to our partners. I have the chance to work with you all quite a bit, and I learn something new every single time. So thank you very much.